Good morning. I'm April Chadwick,
Good morning. I'm Diane Gertis.
and we are with the Mortgage Advantage TMA Corner. Happy
I remember.
February.
Sorry about this. Remember, my phone's not off, so I turned it off. Sorry about that. Yeah, happy February.
You should keep it on so people can see how much people call you. She's always available. She's always available except when we're doing this. So how's your week been?
It's been great. How about with you?
Been good. Been busy. I feel that I don't know, maybe new year, new attitude. I think maybe just coming out of January, but I feel the beginning of February is, especially on my end, agents are out there working, they're ready to get busy. Those that want to be busy are getting busy.
Yeah.
Business sense.
Yeah.
So, how about you?
Yeah. It's it's a different year, and we always are having to kind of learn other things. And even when we went through a similar pivot change back in the 2010s or in that area, we always were having to look for other, not look for other, not I don't think look is the right word, but market to different ways. We are always having to change our marketing ideas, marketing strategies in order to enhance our business. And so it gives us an opportunity. Sometimes when we've been as busy as we've been for so many years, we kind of put the marketing piece of it on the back burner. So now everyone's back to, hey, wait a minute.
Yeah.
What made us successful? Oh yeah, marketing. So nobody became successful in real estate or lending or selling widgets if you're not marketing. Even if you're an actor, if you're not marketing yourself, if you're in Hollywood and you're not marketing yourself, then people aren't going to knock on your door and go, hey, I heard you're an actor. You want to come be in my movie?
Very rare that happens.
Very rare, very rare.
Everything changes. That's one thing I changed, like even the housing market, everything changes. And it's funny that you talk about that, talking about changing, especially marketing. It reminds me, I'm going to change the city because I don't want people to know who they are. But it reminds me of an agent that I used to work with that we knew a long period of time, that they were very, very prominent in their city that they lived in. But the only way they marketed was to take the back page of the paper.
Oh yeah.
For that town. And that was it. And I remember meeting with them like, hey, we got to change, like online. I mean, hey, imagine things going online and stuff, got to change some things. And I remember like, no, this is what's always worked for us. And it always, and now I think about that. I'm like, when was the last time I even picked up a paper?
Yeah.
Like a real paper on a daily basis, not like something you have delivered on Sundays. So yeah, you got to change with the time.
Unless you're 65 or older, and I'm not going to name names, but some people, that's what they still have, that want to fill the paper and
yeah.
Nothing wrong with that, especially like I don't mind reading the Sunday paper, but
you can go on it for ads. If you were looking to place an ad for your company.
Yeah, that's not what, you need to, that's why we're always having to be looking forward, not looking back.
Right.
And even looking at today and monitoring what is successful.
Right.
Because we always have to be looking forward.
Always looking forward. And as, believe it or not, I know some people are riveted. They want to know what you and I talk about in our free time. Talk about things have changed. Like we talked about this morning, 50 years ago. Do you know what song came out?
I know. No,
you do.
You told me. Not that I was alive then, but you told me.
But Tiny Dancer. And then, so as Mom and I were talking about, like, can you imagine living in the 70s and being like, oh man, you know what song I loved 50 years ago? No one knows a 1920s song. But just how you have to change and you have to, keep up with times. You don't look back, you move forward. So it's really interesting. I think
it really is. And you still, and I remember, I know I've told you this story, but if I'll share it, I remember in the late 80s, my girlfriend Regina wanted me to go see the Rolling Stones in St. Louis with her. And I said, I don't want to go see Mick Jagger. He's old.
40 years ago.
I know.
You said the 80s, that's 40 years ago.
So, oh my God. So, there you go.
So moving forward.
Yeah. But you have to look at it. How many groups in whatever, in like in the 1960s, 40 years ago. Do you even remember? 40
Right.
years ago from 1968 would have been 1928. And here we are 40 years ago. It was Rolling Stones, Mick Jagger, still relevant. That's just,
Mom, the 60s were 60 years ago.
oh. Well, I don't know.
It's how it feels though, right?
God,
I was not born in the 60s, not there.
wow.
It hurts, doesn't it? Well, and that's our podcast for today. We're going to get your feelings for a little bit.
That thing with Macaulay, how do you pronounce his name? Macaulay Culkin, that was at Home Alone. Yeah, Home Alone. He goes, okay, I'm going to make all of you feel old. He says, I turned 40 today. So anyway.
It hurts a little bit.
Well, today to get back to lending, what we're going to talk just very briefly, and I know this isn't very sexy, so bear with me, but it's qualified mortgages versus non-qualified mortgages. And non-qualified mortgages have really hit the ground running over the past 2 years. And let me, if I could very briefly tell you the difference. Qualified mortgages, QM, are Fannie Mae and Freddie Mac and FHA, VA, USDA. All of those are qualified mortgages because the government is involved. In other words, when a lender does a conventional loan, conforming limits, which right now is what, $1 billion and below, I'm just kidding. 647,000 in Arizona. And with the good interest rates, the lender has to follow Fannie Mae and Freddie Mac guidelines. Has to. The reason for that is that the lender will, after the loan is sold, I'm sorry, I misspoke, after the loan is closed, will sell that loan to Fannie Mae or Freddie Mac, and they will give them the money so that the lender can go out and do other loans. So that is the qualified mortgage. So that's why we have to follow those guidelines, because Fannie and Freddie are the ones that will buy them, and they're the ones that basically also will secure them. What Fannie and Freddie then will do is that they will package them called mortgage-backed securities. And they will take these mortgage-backed securities and sell them off in the secondary market to 401ks, pension plans, hedge funds. And to kind of segue, back in March of 2020, when the markets looked like they were going to crash, the Fed stepped in and started buying mortgage-backed securities to stabilize the mortgage market, and that is what brought our interest rates down. And when the Fed stopped buying the mortgage-backed securities, in other words, now they're letting them be being purchased organically on the secondary market, then that's what's brought the interest rates up, because there's not as much demand for them. They're letting it stabilize. So just to kind of give you a quick idea, that's the qualified mortgage. And the same thing with FHA and VA. And I read an interesting article about FHA and VA, not to get them kind of I'm doing a little roaming here, but FHA and VA, that it's really sad that there is, if you are making an offer and you're a veteran or have an FHA loan, that could get kicked to the bottom of the pile, because for the stigma behind FHA and VA is that they're harder loans to get. That is not true. That is not. But we'll go over that in another segment. But I just thought that was interesting and very biased on the part of the listing agents and the sellers themselves.
Well, and especially, so for no one that knows and hasn't listened to this ever, Diane is the number one cheerleader for VA loans. They're her favorite.
Yep. Love it. And I like doing FHA also. A lot of, but we'll go. That's not we're going to do qualified mortgage versus non-qualified. Okay, today. So therefore, the non-qualified, and I hope I'm not oversimplifying it. Back in the day, and I hope I'm not dating myself, by 2010, 2008, but Now, those loans, we had what we call subprime loans, those that would do stated income, that we could, you could buy an investment property without a lot of hassle. So these were subprime. Well, they and I'm again oversimplifying it, the non-qualified mortgage is a basically today's subprime, but they've expanded. They're really pretty cool. You can buy an investment property without qualifying on income. They're just going to, you can buy an investment property based on the property and what it will rent for, which is if you put 25% down. You can do, if you're self-employed and you maybe have a lot of write-offs, or in case of one of my clients, he ended up buying his partner out. So his tax returns don't look that good, but he's got awesome revenue coming in per his bank statements.
Oh, perfect.
So the bank statement program, there's some really good programs as little as 10% down just with using the bank statements. And these are only for self-employed borrowers. Or for instance, if you're a foreign national, and I have a client now that is a US citizen working for a Canadian company, wanting to buy a home here in the States, but he's going to have to do it as a foreign national. But a foreign national also means you're a Mexican citizen, want to buy a house here, wherever you may live in the United States, in the world, in the globe, you can come in and do a foreign national program. So there are a lot of opportunities to do what they call a non-QM loan. It used to be that you did a non-QM because you wanted to buy $1 million home, but had a foreclosure 3 years ago or a bankruptcy. Those still stand, but I'm just showing the number of ways it expanded. And I think you had a question. I'm sorry, I'm rambling.
I did, and I meant to bring this up, I think 2 of these ago, but I've been asked twice about foreign nationals. So I'm glad that it somehow got brought up again, that foreign nationals are buying, there's programs out there, and they're not as spicy as they used to be at one time.
Well, where there's a little bit of a disconnect is that people will call and they'll go, what is that interest rate on blah, blah, the bank statement program? Great. We can certainly give you, it's based on credit score. It's based on your ratios. We can give you an interest rate. But again, this is non-QM. We had one last fall that we did, due to the credit scores, did a cash out refi, gets to closing, and they go, their credit's a little, we're going to have to charge you 1/8 more, which it never makes sense to me. You have someone who's a little dicey, and you're going to make them pay a higher interest rate. I know it's for higher risk, but okay. But that non-QM does not have the same guidelines. You can lock in the loan, but it doesn't mean that rate, it's not that they can just systematically decide to change it or right. But if they find something in the file they don't like, they can switch the program or say, wait a minute, you're going to have to pay this additional 1/8 because of this. So there are so many things. And the other thing is, ask me, April, is it easy to get a non-QM loan? Please ask me.
I really need to know, is it easy I bet it's so easy. Is it easy to get a non-QM loan?
It is not. So just saying, it's not that it's hard, but it's still, the difference is the qualified mortgage, Fannie Freddie's is out there going to buy that loan. Yay. FHA, if you're doing an FHA loan, they're going to guarantee it or insure it. I'm sorry. FHA is going to insure it. VA is going to guarantee it. Yeah. Non-QM, they've got their investors, and in order for that investor, there's just not like there's all these, here are the guidelines, but they are so careful that every I is dotted, every T is crossed. And I always start, as you know, what do I start every sentence with?
My apologies.
My apologies. My apologies. But you think they are going to be they're going to systematically go through the guidelines and make sure they're they are followed. Not only that, they're going to ensure that they'll even call the investor and say, well, can you do this? Can we do that? And if they say no, or yes, we can, but you need this. So it's not just because you're doing a non-QM doesn't mean it's going to be just, here's my bank statement, let's close.
Yeah.
It's not that way at all.
Well, and I think you gave a great other point too, that it's not a PSA, I'm not going to say, but I think this is a great time to just say this, whether it's QM or not, but definitely QM, but any loan. I think it's fair for us to say that if you're a client wanting to know if you have questions, it's not like it used to be where you say, what's the interest rate on this? It doesn't work that way anymore. I think for any loan for the most part. So if you'll find out, if you talk to Diane, if you talk to anyone in our office, if you're looking for a rate, they're going to ask you a lot of questions. There's a lot of things that go into it. What kind of loan is it? How much is it? How much are you putting down? Or if it's refi, what's your credit score? There's a lot of factors that go into it. And I know you get asked that a lot. What's the rate? Like you just right off the top of your head, and it doesn't work that way anymore.
The other is that since we're talking a little bit about the markets, I know a lot of you are going to be shocked to find the rates change. Sometimes several times a day, like we've had a couple of days like that. It's not pretty. It's not, but the rates are not. If you get a rate on Monday and you're shopping, you better have all the rates that you are from Monday afternoon. That's what you have to do. Or if you can't shop one rate on Monday and shop another one on Thursday, and they're not going to be the same, or probably they may not be the same.
Well, if you call, and that's a very true thing. Like if you see a rate and you're like, oh, it's a great rate. And a few days later you call and go, I want that rate. It's not there anymore.
Oh yeah, that's my life. And then the other is you've got to be careful if you're out shopping, you have to be careful of what the rates, you read the small print. Yes. And I went through a flurry of this right after the rates started going up, where a couple of my clients that, remember New Year's Eve, I told you that client sent me the email, and then they called me next week. Oh yeah, no, because again, the small print, they didn't ask about the points. And yes, they can make it a better, but which a point is 1% of the loan amount, or you can get a partial point as well. But just keep in mind.
I think that's a great point. And this is another thing to say, when you are going and comparing rates, sometimes clients don't know that they're making it apples to oranges rather than apples to apples. You call Diane and you say, I want to purchase a $500,000 home. I'm putting 20% down. I'm putting 5% down. Let's say they say that I'm putting 5% down, buying $500,000 home, and my credit's great. And you go, here's your rate, no points, anything. Okay, they go to the next person, like, okay, well, what makes a lower rate? Okay, fine, I'm putting 20% down, which they're not really doing. They give them a different list of requirements, and I feel that they get that different rate. They think that they're still going to honor that, and that's not how it works.
Yeah.
And that's why we get a lot of people calling back. So be careful. If you're going to shop rates, be sure to give everything is exactly the same, because you want it to be comparable. And you don't want to go to the closing table and know that you owe 2 points and you're higher.
Well, it's not even, you probably couldn't go to the closing table, not to do jump in, but you don't want to, when you commit, make sure, when you commit to a lender, that you know exactly what the rate is and what they're going to be paying. Because that's, like I said, read the small print.
Well, and I do have a question for you then on QMs. And once again, as I'm saying, don't compare apples to oranges, but I know there's a lot of different programs on QM, but how comparable would you say the rates are?
Oh, that's a good question. On the QM, Fannie, Freddie, those are the ones that you're going to be reading in the paper. You don't say, like bank rate said on Saturday, the average rate for last week, don't shoot the messenger, was 3.6. So, but that's a QM loan. FHA, VA loans, the rates are going to be less, because they market to more the general public, when your veterans and the FHA was the original first time home buyer program. So those rates are going to be less. Non-QM, I'm sorry, those are the non-QM programs, the rates are going to be higher. So it's just going to depend on the type of program. For instance, jumbo non-QM, surprisingly enough, if you have a good credit score, putting 20% down, they're going to not be that, they'll be higher than jumbo rates, but not that much higher.
Oh, good.
And, and you're going to find jumbo rates go all over the place. You have your
Yeah.
premium jumbos. I mean, for instance, there's one lender that basically says, don't send us your self-employed. We're not going to take them. But if you're salaried and you've got 1,000 credit score, I'm just kidding, let's say 800 credit score, you have an 800 credit score, putting 25% down, they will always have the best rate, no matter what.
And I think you just brought something up, and I think that's what our next one should be over, are the different kinds of jumbos, because that's our market now.
Yeah.
Think about it. We're going into jumbo, like jumbos with VAs, not jumbos with VAs, but VA when you purchase higher. So maybe we'll go over that.
Yeah, the VA jumbo is awesome. You can go up to 4 million on a VA jumbo with
she loves
zero down. I mean, I don't know if you could afford the payment or not. But anyway, but yeah, there are so many lending programs, and I know a lot of us are, and most of our clients will qualify for the qualified mortgage. They do, and self-employed now. I wrote about this a couple months ago about doing anal probes on the self-employed for Fannie Freddie, but that piece of it is no longer effective. They've removed all of the COVID guidelines. So that's going to make it a little bit easier, not as spicy as you like to say for the agency. We call them agency, Fannie, Freddie, FHA, VA, but they are all Fannie and Freddie. And then we have FHA, VA are all under Ginnie Mae. So just saying, I can go over that more later either, but I don't want to get you guys all like, oh my God, so exciting.
I feel like we're taking a class.
I know, yeah, I don't want to do that. But basically non-QM doesn't follow the government guidelines. It's even though Fannie Freddie is quasi-government, but they don't follow the government guidelines. They follow the investor guidelines that they're selling the loans to. And
they're not as spicy, but they're not as, what was it? They had a stigma before. And I feel like when you do
there's no stigma anymore. A lot of them do not have prepayment penalties. If you want to do an interest only, you can do interest only. So they have a lot of benefits if that's what you choose to do.
Awesome.
But the interest rates are higher.
But I mean, still rates are low. So that's awesome. Anything else you wanted to add on the QM?
Probably, but I think that's enough I don't want people eyes to start crossing or fall asleep.
Well, and I think the last thing, we have some exciting news. Do you want to say it?
Oh, sure. Megan Huffman in our office gave birth to a beautiful baby girl. She weighed 8.5 pounds, 20.5 inches. And her name is Bellamy Brianna.
Oh, that's beautiful. So we have a new loan officer. Woohoo! I'll be posting a picture of her on our Instagram account if you guys want to see our new loan officer.
Yeah, she's beautiful.
We're at TMA Corner. But other than that, that was great. A lot of info. Good job. It was a great job.
Yes,
well, I hope you have a good week. And for any of you guys, any recommendations you guys have, please message us. We Instagram TMA Corner. You can reach me. I'm April Chadwick, and my phone number is 602-740-5319. And the fabulous Diane.
Hi, you know who I am, Diane Gertis. And very grateful for you, April, our staff at the Mortgage Advantage, and of course our clients and our realtors. So thank you very much. And my number, you call me anytime, is 480-235-5667.
Awesome. Well, I hope everyone has a wonderful week. Have a great week, Mom.
You too. Bye.